guys, welcome back to Hirehood. It's been such a long time I've actually seen you guys. I've been terribly busy with my current work as a director of nursing, as well as we are extremely busy with our agency shifts. So yeah, I never got a time to actually make videos, and most of you guys are actually asking me where am I, and you haven't seen a future updates on certain topics. So today I got some time and I thought, you know what, I'll make some videos for you guys. So one of the hot topic, one of my followers, she actually asked me about the payslips, and she couldn't understand the actual the taxation, what is USC, or she had a lot of questions in it. And when she was asking those questions, I thought, you know what, I'll make a video on it. I searched up in YouTube, and there were only few videos on it, so I thought, look, this is the right time to actually make a video on payslips. So this video is only suitable for people, those who are actually in Ireland or actually are planning to come to Ireland, because it is important that you need to know how much you're making and how much you can take home and where you can save on your taxes. First of all, you have to understand is it's a legal requirement to issue a payslip to an employee. So if you are working in a particular setting, let it be a nursing home or a hospital, your employer should actually pay, when they make your payment, they should actually issue a paper-based or email-based payslips. As you see in the screen, these are the quite widely used formats in most of the employer network. So as you see, it's pretty much complicated by the looks of it, but guys, it's pretty simple, which I'll try to break down in this video further. So first things first, it's a legal requirement. Secondly, it's like most of the employers might pay weekly, fortnightly, or monthly basis. So when they issue their pay, they have to actually send you the payslip. Now, why is it so important to actually get or have a payslip? By the end of the year, when you're doing your tax review, when your accountant is actually doing your tax review, it's very important to have a physical payslip to actually go through it and see whether you're overpaying or underpaying your tax. The second thing is, if you're applying for a loan or any sort of credit agreement with the bank, they want to know how much you're earning before tax and how much you're taking home after tax. So it is pretty simple. The document explains how much you're making before tax, how much are you being taxed, and by the end it shows how much you can take home. Let's explain with certain templates which are commonly used by most of the employers in the country. So if you look at here, I've actually downloaded two templates. This is the most common template which I've seen in most of the employment which I've been ever. That's another sort of template. I've actually downloaded these from the internet. If you want, you can actually download the same and kind of read through it. It's pretty simple. Both sort of templates, or any templates that you are receiving, should contain 4 major parts. So I'm going to break down individual sections and I will explain to you. Payslip is actually a breakdown of 4 different parts. So the first part is actually personal pay details or personal details, where it explains about the pay period, what kind of pay period it is. So certain employers actually pay weekly, certain employers pay fortnightly, certain employers pay monthly. It's up to the employer. It's again the employer's discretion in accordance with their payroll management. The second is actually pay scale point, which I've already mentioned. In HSE, they work on a scalable model where, as a nurse with your experience, let's say if you're 5 years experienced nurse, you will be on a certain scale. When you go to 6 years experience, it actually gradually goes up. So that's the pay scale point. Hourly rate is certain employers, especially private employers in Ireland, they mostly work on hourly rates or an hourly salary. So that will be mentioned in there. The third important factor, and every pay slip should include, is PPS number details. So every individual, so you as an employee, you should hold a valid PPS number, and that should be included in it. And some employers go an extra mile by adding address into it. And most of the pay slips, most of the employers I work with, they never added address to it, and it's not a mandatory thing. So that's the first part, and let's move to the second one, which is the important bit. It's all about payments, or what kind of money we are earning. It's actually showing in the payment section, where it might talk about basic pay, overtime, premium pays like Sunday, bank holidays. Some employers pay night premium, unsocial hours, those kind of premium pays. Everything details will be mentioned in the payment section, as well as allowances. So if you are getting a travel allowance or hotel allowance or whatever it is, those kind of allowances will be mentioned in the payment section. The next section, where in the payslip, which is very important, is all about deductions. So whatever you're making, you have to pay tax. to the government. Let it be through USC, PAYE, PRSI, pension deductions, union membership, payroll deductions. So all this, there's a lot of things which I want to talk about. So the third topic, the third section of a payslip is all about deductions. As you see in this document, you could see PAYE, PRSI, USC, pension deductions, union membership, payroll deductions, etc. And I'll just break it down even further. PAYE is basically pay as you earn income tax. The standard rate is basically 20% if you earn below your cutoff point or your normal tax band. Every individual, according to your circumstances, will be on a certain tax band, or you will have a certain cutoff point. If you earn anything below that, you will be taxed only 20%. If you actually go over your cutoff point, you will be paying 40%. So if you're a single person, for example, if you're a single person with no kids, you can earn up to 35,300 according to 2021 revenue. You can earn up to 35,300 at 20%. If you go anything over that 35,300, you'll be paying 40% tax on it. Same thing applies to if you're married, if you're single with kids and all those things. There's a handy document in Revenue's website. I'll share the link in the description here. You just click on it and you could even calculate how much tax you will be paying every monthly. So it's a very important document where you can see according to your own circumstances how much are you going to pay. The next important terminology that you have to know is called PRSI. PRSI means pay-related social insurance. If you're working in Ireland, in addition to paying income tax, you must also contribute to the Irish social insurance funds, the social insurance contributions. The amount of PRSI contributions you or your employer pay depend on your occupation, your earnings, and the PRSI class you're in. Person A might be having a higher PRSI contribution, where person B, their earnings might be low, their circumstances might be different, their PRSI contributions will be lesser. So as I mentioned, every single individual, according to your earnings, according to your circumstances, your contributions or your deductions will be different. So do not compare your payslip with another person. Every person's payslips are unique, mostly unique. The next deductions is called USC. USC, or the Universal Social Charge, is a tax which was introduced in 2011. I'm actually reading out from the Revenue and Citizens Information website, which says it was introduced in January 2011 to replace the income levy and health levy. You will pay this if your gross income is over 12,012 euro. For example, like if you're earning up to like 50,000 euros per year, you will have to pay Universal Social Charge of 0.5% up to 12,000 euro, which will come around 60 euros, and over that 2% on the next 8,675, which comes up to like 173 euro, and 4.5% on the rest of the balance, which is 29,000, which comes up to like 1,300 euros. All in all, this person who is earning 50,000 will be paying 1,552 euros in 2021. And pension deductions and union memberships and all are actually optional. So if you opt into a pension fund, if you're working in a private nursing home or hospital, there will be deductions mentioned in the third part, in the deduction section. Union membership, if you're a nurse and you're an INMO member, those kind of deductions also will be mentioned in that sort of section. That concludes to the third section, which is deductions. Now let's move on to the final and the last section, which is called cumulatives. If you look at the pay slips which I have on the screen, and as I mentioned, you can actually download this sample format. Cumulatives is actually, I'll read it out again from the website. Tax is normally calculated using the cumulative basis. This means that each payday, all earnings and all tax credits from January 1st of that year are accumulated. This is to ensure you have paid the correct amount of tax and you receive the benefits of all your tax credits. So if you look at here, the gross pay, non-tax deductions, taxable, tax credits, standard cutoff point, and everything like that, it's accumulation of all your earnings, your taxes, your tax credits, etc. will be shown in the bottom part. One of the terminologies which stands out is called tax credits. Tax credits is the amount of money that can be deducted from the tax you pay. You're entitled to tax credits based on your personal circumstances, and they are allocated to you each year. Any unused credits are forwarded to your next pay period. So these all information, what I'm reading out of what I'm saying, it's all available in the Revenue's website and Citizens Information website. Also, I'm referring to a website called taxback.com. If you look, this template is actually from taxback.com. As I mentioned, when you're actually approaching a year end, you need to talk to your accountant, get your tax credit certificate and your couple of pay slips send it to your accountant and let them kind of see whether are you paying over tax or under tax. If any mistake is being made by your employer, you might be you might end up paying a lot of tax, or you might be paying lower tax, which can end up in a bigger problem later stage. And before I go, I want to mention one important thing is, if your personal circumstances changes, that if you're getting married or into a civil partnership, you should always inform revenue as quickly as possible, because you could end up paying more tax than you need to. In this case, you can claim some tax back. So that's one snippet which I took from taxback.com. Anyways, I hope I have explained every single detail relating to the payslip. If you have any queries, guys, best thing is to contact the revenue directly, your accountants, and sit with them and get it sorted. Hopefully you might get some tax back. And as I always say, if you like this video, please don't forget to like, share, and subscribe. Until next time, Sri Nair signing off. Bye.